The latest Swedish GDP figures paint a troubling picture of an economy sliding into recessionary territory. With a 1.1% year-on-year decrease in Q1 economic growth and a flat 0.1% quarter-on-quarter, it's evident that Sweden may face economic contraction throughout 2024. Unemployment rates have surged, reaching 9.2% in March 2024 compared to 7.7% a year prior, potentially inching towards double digits. The downturn is notably reflected in the construction industry and housing market, where declines have been persistent for several quarters, signaling a broader economic downturn. Observations of a real estate market crash since Q4 2022 underscore the severity of the situation, with residential property prices plummeting. The root of Sweden's economic woes lies partly in its staggering household and corporate private debt ratio, which soared to 310% of GDP in 2021 and remained high at 307% in 2022. The housing market frenzy fueled by pandemic-induced borrowing has exacerbated this, with household lending peaking at 6.8% growth in mid-2022, coinciding with the market's decline. In response, the Swedish central bank has cautiously begun shrinking its balance sheet while maintaining a steady interest rate of 4.1%. However, the interbank interest rate curve suggests challenges ahead, with decreasing rates possibly indicating reluctance among businesses and households to borrow amid economic uncertainty. Despite efforts to stabilize the economy, inflation remains a concern. Consumer inflation expectations surged to 6.5% in April, likely influenced by rising unemployment and constrained disposable incomes. While the official inflation rate sits at 4.1%, still far from the central bank's 2% target for price stability, the Harmonized Index of Consumer Prices, HIC, stands at 2.6%, showing signs of convergence. In sum, Sweden grapples with a complex economic landscape characterized by recessionary pressures, a distressed housing market, high debt levels, and inflationary concerns. Navigating these challenges will require careful policy interventions and proactive measures to revive economic growth and restore stability. Don't forget to subscribe for more updates, and I'll see you in the next video.